Guys, what's up? Good to be with you once again. This is the TD Markets Academy live podcast. It's good to be with you. As always, it's a privilege. It's an honor.
Yep.
As T always says, he's not riding solo. I will adopt exactly the same stance this morning.
Yeah. No, go for it. It's all right. Let's go. It's all right, ladies and gentlemen. I go by the name of Tsepo. We've had a rough day, a busy day, but a nice sunny and hot day outside. Yeah. So don't worry about what's happening here. I might even fall off my chair.
So
yes, we are back again.
So as always, it's a privilege.
Yeah.
It's good to be with you guys.
Sure.
Ashley Riviere, T already mentioned. It's another episode.
Episode 6.
Season 3.
Season 3.
Yeah, we had a very interesting recording on Tuesday. Do you think we should mention it or just leave it alone rather?
Let's just tell them.
Tell them? Yeah. All right, go for it. Go for it.
So we are recording this on Thursday.
Tuesday.
Today's Thursday.
Thursday, we were recording it on Tuesday,
Yeah, so this one is on Thursday, the 23rd of November. So we initially recorded this, what we're about to talk about here, the topic, on Tuesday, this past Tuesday.
Yeah.
But now, we were not aware that there's not enough memory on the camera. So we only recorded 10 minutes and the camera cut. Boom. So that episode would have gone out on Wednesday.
Yeah.
Right. So there's been a bit of a delay. However, I think we are more amped up.
Yeah,
than we were on Tuesday.
Exactly. Hence me forgetting, stumbling a little bit there in the beginning because we want to get out this content when you get the content out, right?
100%.
So I mean, we had a fantastic run, October, November.
Yeah.
We now nearing the end of the year.
Yeah. It's so close by, man.
It's so close by. And we will stand by with more information as to what happens with the academy, what we'll be doing, after the 16th. But me and T will definitely communicate with you guys with regards to that.
100%.
On today's topic, if we can shoot straight from the hip,
straightforward,
right?
Yeah.
So T mentioned something important on the last episode, guys. That was identifying problems. Identifying problems as a beginner trader.
Yeah.
But we also went and said it's not only beginners that obviously struggle with that. It's intermediaries as well. It's guys that have experience for 5-7 years. Doesn't matter.
Yeah.
And they still struggle with confidence, which was what we had said in the beginning, right? And we chatted about confidence and how you can build up confidence. What are the kind of things that you can look at?
Sorry to cut you there. If you guys missed that episode, it's episode 5. All right.
That's 5.
We spoke about all of those things. So after this one, you can go ahead and check.
Absolutely.
Episode. Yeah.
Exactly.
Go for it.
So T, do you maybe just want to track back a little bit with the guys, why we mentioned confidence, why that's important?
Yeah. So the confidence plays a big role in what we do, right? In the financial markets, trading and all of that. But there are some times where someone can lack confidence.
Yeah.
And that's because of a lot of things, various things, all right? And then we went deep into that and say, actually, confidence can come from, lack of confidence can come from you not fully understanding your strategy and how you trade. Basically breaking it down from that perspective or that point, looking at the data of your strategy. So if you don't really understand the data, the numbers behind your strategy, you'll keep on trading. And then at some point you might take 2 losses in a row or 3 losses in a row, and then confidence drops.
Yeah.
Whereas if you know how your strategy performs over time, those 2, 3, 4, 5 losses in a row should not shake you because you know the probability of your strategy, the numbers behind your strategy, and how you risk, so forth and so on, right?
Yeah.
So that was essentially the basis of what you spoke about.
Yes.
And it went a little bit deeper, of course.
A little bit deeper.
Yeah.
We also mentioned, remember, confidence is to have trust.
Sure. Yeah.
To have faith in.
Yeah.
And that would be a strategy.
Yeah.
Now, which then threads over to this session.
Yeah.
Which is another problem that many guys don't know. And that is to distinguish the difference between a strategy and a setup.
Dive straight into it.
We dive straight into that, because
distinguishing the difference
between
a setup
and a strategy. Because it is not the same thing.
It's not the same thing.
There's guys that think it's the same thing.
Yeah.
Must we just chat for a couple of minutes on that? Why would guys think a strategy and a setup is the same thing?
I think from what I've seen, what I've observed and experienced, of course, is there's a fine line between the two. A strategy can look like it's a setup, but in actual fact, it's not. A setup is I'm trying to find the right wording for that. A setup could be a particular price movement that creates your setup for your strategy to be implemented. Because a strategy is a set of rules, but those rules mainly indicates how to enter the position. A strategy is how to, right? The how to enter the position. So therefore, it has a set of rules. But now a setup is strategy is implemented on a setup. So a setup is price action with obviously a combination of a lot of things that creates that setup that then enables the strategy to perform and your strategy to tell you where to enter and so forth and so on, your exit points as well. Right. Now, the reason it can be confusing is because a lot of beginners first learn a strategy and they think they've got it. Even if the strategy is good, but along the way, they might, experience a lot of harms or whatever it is, and then they might give up on that particular strategy, which I think is a point we're going to talk about. But now, that is the wrong way to do it when you learn a strategy. It's important that you learn how the market moves, have a basic idea. It can be as basic as possible, right?
Exactly.
It can be as big as possible. Learn that and see what happens, see the things that repeat and all of that, so that you know where to apply your strategy. The market has different conditions.
Yes.
Sometimes the market goes in what we call a corrective phase. Sometimes the market goes in what we call, it accumulates orders. Sometimes it goes into what we call a trending phase or a distribution or an impulsive phase. Certain strategies are built and created
around that.
Yeah, right. It either could be around the impulsive phase of the market or the corrective phase of the market. But if you don't know that, you might then wear slippers and shorts in a rainy weather.
Exactly.
Right? Where's the po? Come on.
But that is so true, though.
Yeah.
Can I put it in another way?
Go for it.
So we've established that a setup is the market conditions that gets given to you. You don't have control over that.
You don't have.
That's something that you're. So the setup is something you can't control.
You can't.
Because it's either the corrective phase or the impulsive phase or the thrust to the upside. So that's the way the market works. It moves up and it corrects. Moves up or it goes down and corrects. It's just in the opposite directions, right?
Yeah.
So the setup is what the market gives you. The strategy is how you respond to that specific setup.
Yep, essentially.
Now, if you look at you into soccer, I'm into boxing, right?
Yeah.
So there are different types of boxers. You get aggressive boxers. You get boxers that want to weigh you down. So they're going to, first 5 rounds.
Like Tyson Fury. Does he do that?
No. So he's a heavyweight.
Okay.
So heavyweights have a different way in which they actually approach the ring. So they have more stamina. Lightweights now. Lightweights have more stamina because obviously they don't have this big build. So they have a lot of endurance, right? So a heavyweight, yes, has endurance, but they also train a different way. Whereas if they give you a power punch, you're in trouble. So a guy like Mike Tyson, as an example, in his prime, right? He was knocking guys out like in 13 seconds. In the first round, even. So in the first round, he comes to you very aggressively. That's a setup. So your trainer will train you how to fight an aggressive fighter.
Yeah, there we go.
But the problem with Tyson is no one could figure out how to counter that aggression. Because he had a way in which he approached you that made you very nervous and you wouldn't know how to respond to him. You see?
I see.
So now you get a guy that endures, like a Floyd Mayweather as an example. He watches you, or a Gervonta Davis. He watches you. He tests you, looks how you box the first 3-4 rounds. After that, he starts to put pressure because now we studied you. Now he knows how you move. So as an example, someone will go, they'll have their signature combo move, like 1, 2, 3. 1, 2, 3. So Gervonta will look at how many times do you throw that 1, 2, 3? In the first round, you did it 3 times. Second round, you did it 2 times. Third round, you did it 4 times. You'll say, wow, in the space of 3 rounds, you tried to hit me with that same combo 10 times. So when round 4 comes, now he has a window of opportunity because he studied you. 10 times you went 1, 2, 3. The moment you go 3, that's the window. and he knocks you out.
That is now the data.
That's the data gathering.
Sure.
So he studies you, and exactly the same as a trader, we study the setup. How many times do we see it over and over? Which I want you to talk to the guys about how to start creating your own strategy by the duplication thing that we've chatted about before. I'm not going to spill the beans now. We're going to leave it for a little bit later, right?
Sure.
So you study the setup as a boxer. You see how many times the boxer does that, and you learn to counter that. So that's what the guys are doing. So they're watching that boxer so carefully, all his fights, all her fights. If you're a fighter, if you're a woman, because I mean, there's some women they can knock you out. and so they study you. They say, okay, we're gonna train. When that move comes, this is what we do. When that move comes, this is what we do. When that footwork shifts like this, when you go to the back of the ring, or to the corner of the ring, that's what you normally do. When you come to the center of the ring, that's what you normally do. When you run around the ring and you don't want to stop, why do you do that? So they look at all of the data and they counter you with the strategy. So put another way, the strategy would be, how do I counter Mike Tyson's aggression?
There we go.
Because he's going to come with it no matter what. That's who he is. He fights that way.
Sure.
So that setup going up with that trend line, price creates a high, higher low, higher high. Okay. So now we pause. High, higher low, higher high. That setup already tells us this is an uptrend because it has two highs, one higher low, which is the support, right? Now, with us understanding that 3-point movement there, how do we trade the higher high now? Because that higher high might have another retracement coming back down. It's possible. So if you just buy when the higher high is done, you can get yourself into a lot of trouble.
You can get yourself into a lot of trouble. And, I'm glad you used boxing because it makes so much sense. As you were talking about it, I was busy picturing it. And I hope the guys did there, It makes so much sense because now it all boils down to, how well you figured it out. Okay, let me not use the word figure out, but how well you studied it.
Yes.
Right. So that you know where to counter. Right?
Exactly.
Even though your counter might not be perfect, but you identify the gap.
Hey, guys, you see now T is taking it even deeper now.
Okay, exactly. Yeah.
Okay, 100%. It might not be perfect.
But you saw that most of the times that's where the gap is.
Yes.
Right. So now beginners, the mistake they make, they want the counter to be perfect. The counter is the strategy. All right. So they want their entries to be perfect. I don't think there's something such as perfect entries. I don't think
there isn't. I agree with you, Han. There's good entries.
There's good entries.
There's accurate entries, maybe.
Let's use accurate.
Accurate entries, but never perfect.
Never perfect because we cannot control the setup.
Exactly.
Right? Even though there's gonna create, we're gonna do that combo.
Yeah.
Right. You cannot control maybe the speed and how
the speed of it.
Create. They're gonna make the combo and what. But as long as you know the gap is there,
it's there. Because I mean, what if punch 3 maybe doesn't land on your chin, but maybe scrapes your neck? And you feel a bit of the power and it throws you off. So you don't know if where it's going to hit. You can't always duck everything or miss, or there will be a moment where it maybe hits your shoulder, or it hits your chest because maybe you moved in the wrong way, and the third one got you. And so now you need to recalibrate, and you need to be okay. Hold on, let me get my bearings right, because this guy I know is going to come with a 1, 2, 3 again. So just to get to that point where you're saying you can't get this know the speed of it. You won't always know where you are hit because you could be hit by punch 2 or punch 3, right? Now, question. The setup comes, the guy comes, gives you the 3-point combo. You miss it once, miss twice, miss 3 times. You went to entries now. Now, if we're looking at entries, because we can't control the bid and ask, all the quotes, that's given to us by our sources. So you can't say you're going to go in exactly at that point unless it was a pending order. Exactly. Then you can say, okay, I went in at 1.0671. But if you're doing market execution, it's the best available price at that moment. There we go. Right?
Yep.
So when that punch comes and you counter and you want to enter the market now, you said something powerful. You said you can't control the speed. It's not always perfect, that counter.
Yeah.
Here is one of the things that guys do. They think using a big lot size is the way to be perfect in that moment. because most guys want to use the bigger sizes to make a lot of money, but they don't get the accuracy of their setup and strategy right. Do you see that?
Yeah, so I see that. So let me just jump in there. So looking at that 3-point combo, right?
Yes.
When you mention using a bigger lot size,
yes,
maybe to, like, I don't know, for whatever reason.
Yeah.
Could it be that they are countering on the first point, on the first attack?
Absolute. Exactly. Exactly. So punch one comes.
Yeah.
And they want to counter with 1 or 2 standard lots. The market condition counters them.
Yeah, because it's still developing.
It's still developing. You must wait for the 1, 2, 3 to pass.
There we go.
So one comes, you counter with 5 standard lots. Price moves against you. Hits your stop loss. Punch 2, 3 happen, and price goes up. You were right. About the setup. You were right about your strategy. You just went in prematurely.
Well, you knew how to use the strategy, but you used it too early, if I may say that.
Exactly. Premature. Exactly. So it was a premature entry. So now you lose because you try to counter him at 1, but he must finish his 3.
And it's not always about, okay, let me not put my stop loss because I understand that the third punch is going to, it's not about that.
Yes.
It's not about that, because now we're trying to be professional.
Yes.
Right? We're trying to follow a set of rules and guidelines. So now it's important that we understand exactly what you're talking about there, where the 3-punch, we have to have the patience to wait for the 3-punch.
Exactly. Yeah.
So that we can have complete confidence in that entry.
Exactly.
It's not going to be perfect. There's nothing as perfect, but the accuracy will be there because you are trading in the direction.
Yeah.
Right. Where you had anticipated according to that data you saw.
Yes.
100%.
Let's even go further, bro. That 3-punch combo might not happen immediately.
Yep.
The guy might come with one big swing and he misses. Then he goes back. Then he comes and number 2, he misses again. So now those 3 punches are further apart from each other, but it's still 3 nonetheless. So you count 3. So he used and exerted energy in those 3 punches, which means he needs to now relax.
And, there we need to then really know that we need patience.
We need patience now.
Right, yeah.
Because it can touch 1, 2, 3 quickly, or it can be extended periods, and that's what the market condition can do. It can have the one touch, goes down, correction, right to the very deep correction, even past the 61 point.
Maybe 88.
Yeah, around the 88, right? Finds support and then pushes back up, and now he's coming for punch 2. So it's like he wanted to preserve the energy from the back, come with punch 2, hits the same resistance, small correction, punch 3.
Now, you see, I think that's the beauty in trading. We cannot control that. You can't control.
You can't. That's what exactly, you can't.
There we go. So I don't know how to exactly put it in words, but, that's where I find the beauty, because I'm able to recognize this thing.
Exactly. For what it is. It's showing me.
It's showing me.
Yeah.
But now, it is not complete as yet, but I can see something is happening, That's where the beauty is. So now you wait now because all right, it is about to go down. If it happens that you are looking at 3 other pairs, you can even ignore them because okay, here's the opportunity.
Exactly.
Right?
Exactly.
We cannot control how quick the setup can play out or can develop. We just need to wait. And that's the beauty about trading. And that's the thing. Patience is the thing that, beginner traders, and we understand that they're still learning, right? But even if they've learned, patience is something that can be a problem.
It can be a problem.
A huge problem. So now I believe that it goes back to what you spoke about on the previous episode, having the confidence, but understanding your setup to have the confidence. I think it boils down to that. If you really, let me make an example. If so right now we're in Sandton, right? And then you want to travel to, let's say, Randburg or Hyde Park, right? You know the way to get there.
Yeah.
What you don't control is the traffic.
Exactly.
Right? It might be during rush hour. You might get there an hour later.
Accident happens.
That's something you cannot control. But if you know how to drive and how to get there, that's the strategy
Yeah.
Right? And then you've been traveling there a lot of times. You do understand on average how far it can take.
Yes.
The journey for you to get there, right? That is something that it can be a problem sometimes.
Agreed. Agreed.
You're stuck in traffic. It's past 45 minutes. You're stuck there. You think, I don't have the patience. You can even turn and say, I'll go tomorrow. Opportunity gone.
or you can take another route.
And yeah.
You see, so it's there. So this is the route you normally take, but because you understand your way around the market, you look for different areas that looks attractive for you to take that specific entry.
Now that's when we get, like, I don't think at the beginning stage that is possible. That's when we get now to advance.
Exactly.
But that's a very, very, very important point.
Yes. Yeah. So beginners, remember, just to go back, we distinguish between the setup and the strategy. Your setup is the market condition that you cannot control.
Yeah.
It's going to give you impulses, thrusts, corrections, retracements, reversals, all of that. It's going to give you the phases like T mentioned, accumulation phase, breakout phase, and the movement or distribution phase. Those are things that happens beyond your control. Yep. The strategy is it built around how to trade each of those things. So guys, remember, in the academy, we show you these kind of things. Don't forget that. All right.
Yeah.
So now that we've established that specific area of content, right? We know now we've distinguished the difference.
Yeah.
We know that a setup is futuristic because it is what has happened, what is happening now, and how price has performed to where it is now is an accumulation of performance.
Yep.
And so you are looking to see if that performance obviously either goes up or if the value comes down, or if there's non-performance, right? Now, if the setup is futuristic, and it is because we understand it is, how do we then begin to develop a strategy around these different market conditions? Now, this is where I want you to break it down for the guys in the way you know best, because I think the guys struggle with this part on how to monitor. So I think maybe just break it down for the guys.
100%. So first thing that we need to remember and understand from the get-go is technical analysis is visual, right? It's all about visuals, right? We look at candlesticks, we look at patterns. So all of that is visual. So now we need to train our eyes to be able to recognize and identify these patterns that move, right? So now how do you then start to get to a position or a place where you know what is likely to happen according to a particular thing?
Yes.
I always talk about while you're monitoring, right? Because we need to go back and use the back data or historical data.
Yes.
While you're doing that, I'm an advocate on taking screenshots of these things. Taking screenshots.
Please, brother, please detail that down for the guys, because it's powerful.
100%. So in order for you to be in a position to really have what we're talking about, the confidence and understand where to apply different market conditions, look at how the market has been performing. Try your best to recognize and identify things that happened in the past, but that gives you consistent movements.
Yes.
All right. Could be a pattern, could be a reaction of a zone, could be anything. Trust me, could be anything.
Yeah.
Right. And then what you then do is that properly look at it, carefully study it, and start taking screenshots. Not one, not two, not three, but a lot of screenshots. Because now, look, for you to have confidence, you need sufficient data, right? And for someone can come and say, okay, should I take 20 screenshots? Should I take 30? Should I take 50? It all boils down to how really you want this, right? How bad you want this.
So that drive
has to be there.
It has to be there for us.
Till this day, I take screenshots. Because the market is forever evolving. There are some times where we tweak our strategies to accommodate the current movements of the market, but the concept does not change.
Exactly.
Right. So we need to start taking screenshots. And after you took screenshots, I mean, they can even use a PowerPoint presentation to paste those screenshots or Word document, anything like a journal.
Yeah.
Right. And then from those screenshots, try and recognize those patterns and see the consistent movements. And if you can see that, if they can spot that, then they're halfway. They're halfway in now. So now they will then automatically, they will have the patience, automatically they will have confidence, because all they're going to do is to wait for whatever it is they were able to identify, to wait for it to form.
Yeah.
And when it forms, they will have an idea and possibilities of what the market will do. A lot of beginners also do this, and I've been there as well, where they're trying to break down every single move the market make. They're trying to look for reasons why the market, why the market did this move and that move. No, it's not about that. It's about looking for the highest probable scenario. That's something when I talk about probabilities.
Yeah.
Highest probable scenario through those patterns, through whatever your screenshots, and always bet on that direction.
On that part, I'm sorry
sure.
on that part of overthinking, because you said something very powerful. You said you're trying to look at everything as to why the market did this, did that. And the big guys know that we're going to overthink as retail traders. They know.
That's why there's something, there's a lot of theories around this. Your stop loss hunts, your manipulations. To me personally, those things don't matter, because the market will always follow its natural flow or whatever condition.
Agreed.
Right. So the big boys, they know how retail traders think.
Exactly.
That's why retail traders, especially beginners, apologies to always mention, but it's education at the end of the day. So that's why tight stop losses can be a little bit dangerous, because they know on a particular setup. And that's why sometimes the setup can take longer to move.
Exactly.
Because they know this is, most of the time, the market will present the best opportunity here.
Yes.
So us as big guys, what do? Let's try and manipulate it quickly. I don't like using the word.
Yeah, that word is very.
I don't like using
I hate that word too. In this context, like with trading, it just sounds,
man, I don't like using it. But basically that's it. Start taking screenshots. You can even take 200 screenshots. At the end of the day, you will know how the market will perform as soon as whatever you see happens.
Exactly.
And then you are 80% in.
Exactly.
Then the strategy will then come in.
Exactly. Exactly. Now, just going back to the boxing, right? What I've seen is that some people, they make judgments before the fight happens. And this actually blows me away as to what I've actually, they make the judgments, they take the bets.
Yeah.
And they take their bets and their judgments and they conclude based on what the fighter has done historically. And this is the difference that I've now seen with all the interviews, because I always watch the press conference before the fight and I listen to what the fighters say, because the promoters say what they say. They're obviously promoting the boxer, so that's obvious, right?
Yeah.
The fans are going to stick with their specific boxer, but who I actually listen to is the boxer themselves. What do they say about themselves? 1, 2, what do they say about the opponent? And so what I've seen, the judgment that comes before the fight, many times when the fight is happening and when the fight's over, it's a different story.
It's a different story.
Why? Because everyone made their judgment based on this fighter because he's beaten 25 people by knockout. He's going to knock this one out also to make it 26. But then this fighter has been studying him and how he does the knockouts. Then what happens is the guy that's giving knockouts, all right, he just moves his head in the wrong way slightly. And this other fighter counters that and knocks him out. Just because his head was slightly moved and he just punched him at the right place, either his temple or maybe it was a liver shot, or he just had a lucky shot to the chin and he dropped him. And the fight is over. And then everybody up in the beginning said this one will win. But then the fight, when it's ended, the other guy won. So the same happens in this specific market where you judge this thing or this movement, this uptrend, and say, this is a definite uptrend. Look at all these higher highs. Look at all these higher lows. But then the opposite happens and price just moves against you. And the setup that you obviously had thought would play out, even although you've studied it, we must never forget that fundamentals can delay that setup 100%, especially if it's high impact data. And price will drop down completely, leave a very long spike. Doesn't mean your setup was wrong. It's just in that moment, it's just at the right place, wrong time, or wrong time, right place, the price dropped. And so it goes back to what you said. Even although that happened, price will then go back to its trend.
100%.
It will look different now because now that spike must be filled. So now obviously there'll be candles and it's going to, the setup will look different, but the core of the movement will still be, we were moving up. It 100%. Just delayed at that moment in time.
100%.
Did I explain that properly?
Makes sense. And, on that point of the other boxer, noticing something in a split second and reacting.
Yeah.
That's where now also awareness is important. Trading. That's where, because as you were talking about that, awareness just came to mind. Yes, the news can do these things, and I think awareness is it's something that we work on as traders.
Yes.
And later on, then it would be well developed and so forth. But we need to also have that awareness, man.
Yeah.
You know, to be, just to be able to recognize and identify these things.
Can I give an example of that maybe for the guys?
Go ahead.
Let's say, for example, we have a high, we have a higher low.
Yeah.
Okay, so now we know the higher low, and the high is the first step to the beginning of the trend. We create a higher high. Now we know these cycles, they move in 3 to 5 cycles. So it's the first cycle up high, comes down, hits a higher low. That's first one, right? We push up for the higher high. Now we measure that new higher high with the fib. Because remember, I'm giving an example of awareness.
Sure.
So the higher high, we measure, say, okay, if this price retraces to the 38.2 area, I'm 100% with that. I'll wait. If it retraces to the 50% on that fib, I'm okay. If it closes beneath the 61, my awareness kicks in and I exit the market. I'm going to exit the market because I'm aware that my buy is not going to play out now.
There's a high probability that it won't play out.
It's not going to play out right now. So I will rather exit manually. Even if I take a $10 loss,
sure,
it's okay. I'm taking the punch. But I know that I don't have to take that 10 times more now because I chose to be emotional about it and say, I believe this thing is going to go up. It's not about your belief here.
It's not about your belief. It's not about your belief.
We trade what we see.
What we see, exactly.
And
that's it.
If it's going below the 61 point area, the probability is higher that we go into the 80 point. And if we go past the 80, we're retracing 100%.
Yeah, we're retracing 100%.
It's a fail now.
And that gives us other scenarios.
It gives us a different scenario now.
Different scenario.
So the awareness kicks in after 61 points. You're like, I'm exiting. The probability is high.
You know, that's a proper example to use. You know, I just lost my train of thought. There was something powerful that I'm gonna hoy in there.
All right.
But I'll remember it. My goodness.
So try to remember it whilst because sometimes it just comes back to you, right?
Yeah, no, it will come back.
So so the 61. So that's one example, right? Another example might be you have a candlestick that shows you, listen, this is a pin bar. That's a hammer. Hammer is a sign that price is pushing to the upside.
There's been a rejection.
There's been a rejection. It's a long tail and it's at the support. We see it's closed above the support now. We want to push up. Now, the awareness part comes in. Where did the body close? Did the body, it's a pin bar, did it close above the support or beneath the support? Because if it closed above the support, the probability is higher. It's the proper signal. My awareness kicks in and says, okay, we're going to push up. But here's the flip side. That body closes beneath the support. Your awareness already kicks in to say, this support was violated here. It looks like a pin bar. It looks like a hammer. It's another word for it. Because, I mean, you get these different terms for the same candlestick. So, guys, remember, it's not about the word. It's about the function.
There we go.
It's about the function of the candlestick.
Say, you know, there are hundreds of names.
Hundreds of names.
Focus on the name.
It's
focus
the function.
On the pattern. I like how it forms, how it looks.
Exactly. So that's so guys, remember, so above the support, beneath the support, that difference there makes a difference as to how you trade that specific setup.
Yep.
Does it make sense? Did your
I'm trying to think about it, but
is it still there?
It will come, yeah.
Okay.
Yeah. So that awareness there, right? With the example that you gave there, it can be that one can be so minimal that we can miss it sometimes.
Yes.
And, you know, there's no problem with that. You
know?
But even though we miss it, it goes back to the counterattack, right? If we fully understand the strategy, we can then, I'm not sure if there's such a word as counter the counter. I'm not sure if
we can create it. I mean, but I like that though.
Yeah, you know, we created, maybe it's there, counter the counter.
Yeah.
You know? Yeah, 100%. So those fine details there, my man, sometimes you can miss them, right? And sometimes the trade can play out. Sometimes it cannot play out, right?
Exactly.
But now if it plays out and then we are able to, at that point in time, to be aware and to see it, we can really get a good risk and reward ratio around that, on that trade. But now, if it doesn't play out, I think it's still okay. As long as the rules were there, the rules told you, enter right here when this happens, right? And that one's very broad because the support, the close either beneath, but there's still a tail to the downside. I think it can give us two possible direct.
Yeah.
Well, If it closes below, it means the support has been broken. But for the fact that there's a tail, it means there's still pressure.
There's still pressure.
Still pressure.
Yeah.
In that way, one might want to wait for the next candle to see.
Exactly. Because your awareness kicks in there.
Yeah.
Let me wait for the next 1 or 2 candles to see if the buyers are actually giving into this demand zone or not.
Yep.
Now, brother, whilst you getting that, because I want to hear what you have to say with the thing. I hope it comes to surface here in this episode.
I hope it comes. But
now the pressure that traders have is how it's also marketed, because people, they market their strategies as 99% accurate. Come and take a signal, you're going to make lots of money with us. Now you leave that person and that stained your mind that, you know what, but why is this person so accurate? Why can't I be so? And that starts to play on you psychologically. And you start to be hard on yourself. And I like how you said it. It's okay if the setup doesn't play out. You see, you are free from the pressure that other traders are still finding themselves to be imprisoned by. Why am I not successfully doing this thing? Why does my setup not pan out? Is it because I'm never going to make money? Is it because I got the wrong mentorship? Is it my broker?
Yeah, those things can
look at those things. It's like it's your mind, and now you're trying to find problems with things where there's no problems. Because of how things were advertised to you. 99%. If you tell someone you have a 99% accuracy rate,
you must run away.
Right, please run away from that.
Must run away,
because you will never become an independent trader if you're around people that keep saying I'm 99% accurate. You're gonna depend on them.
And you know, like I think we spoke about this on the previous episode, but now the issue of the win rate of a strategy, and yes, I got that, it came right.
Oh, I got it. Okay, brilliant.
I'll just mention it now. The success rate of a strategy, as you say, there's a lot of marketing around that, right? People think you should have a 70% success rate, 80% success rate. It's not always like that. It shouldn't always be like that, because now risk management also comes in.
Yeah,
it's part of the strategy. And I think for you to be successful, you can even get a 30%
it's fine
strategy.
Yeah.
But as long as your risk management, your risk and reward ratio is in your favor, even if you lose 6 trades in a row, the next 4 you're gonna get, they will put you in a positive.
Exactly.
Because it boils down to if your risk is lower and your reward is higher.
Exactly.
Right? You know, I'm confident in losing 5 trades, knowing that it's all 1%.
Exactly.
Which is at the end of the day is 5% loss.
Exactly.
And the next trade I win is not going to be a 1% reward.
Exactly.
It has to be a 3% reward.
Exactly.
So I can take 5 losses in a row. I'm not going to be shaken, but I know the next 2 trades that I win, I don't have to win 5. Just next 2 trades, they're going to put me in a positive.
Exactly.
And that's how it essentially is.
Exactly.
Right? Going back to what I was going to say. It came back. I was going to make an example. You mentioned something there. And I was going to say, you know, take an example of a soccer player, right? Yeah.
No, switching to the other sport. Let's go to soccer.
Right. Probabilities. You spoke about probabilities, but you explain it in a chart and whatnot. If a soccer player that plays a striking role, striking position, like maybe a Cristiano Ronaldo, whatever, but someone who's not that prominent, maybe who's developing, if they know through the years that every time they shoot with their right foot, they score. 80% of the time they score with their right foot, and only 20% of the time they score with the left foot. Which foot do you think that players gonna always depend on to score?
Exactly.
The right one.
The right one.
Because 80% of the time they score.
Exactly. There was results. There was results.
Yeah. Right. 100%. I think I want to mention that. Still coming though.
Okay. So the probability of the data must be monitored.
Yeah, 100%.
So that
I think it gets monitored on the process of taking screenshots. Yeah.
For you to take screenshots, you have to study different market conditions. And then you develop your strategy from those market conditions, aka setups, that the market gives you.
Yeah.
In actual fact, we should actually feel privileged that the market gives us setups.
100%. I mean,
it's actually great that the market gives us. We don't have to go and work for it.
We don't have to go and
we don't have to create it ourselves.
And also, one thing we need to remember about setups is it can be a combination of a lot of things.
Yes.
Right? I mean, the market moves in random movements, but within that mess the market creates, there's all these patterns, key levels, market reacts to all of those things. So when you talk about a setup, we're initially talking about a combination of a lot of things because there's a lot of moving parts to this combination of a lot of things where it gives you the highest probable scenario.
Yes.
An example that I want to make here, you made another example. Another one that I would make is taking a demand zone.
Yes.
And then looking for setup. Now, before I continue, there's opportunity each and every day.
Yeah.
Right. There's setups each and every day. But the question is, the setup you're looking at, does it tick all the boxes of that setup? Right. If through your backtesting process, if you have identified that when a demand zone forms on a support zone and it's in line with either a 50 of the Fibonacci, as well as maybe let's put in maybe a moving average. There's a bounce on the moving average.
Yeah.
There, right. If you've noticed, when the market creates a price movement that has all of these things at once, right? Because that's a setup at once. And then you see most of the time the market reacts this way. There we go.
That's the probable.
That's the. But now, if on a Tuesday or Monday, the same thing happens, but you see the moving average, the market's not bouncing on the moving average.
Yes.
Or maybe the demand zone is not there, but the Fibonacci is there. Then we need to be disciplined now because it's not ticking all the boxes.
Yeah. Open up another chart. Go somewhere else. Yeah. Just leave it alone.
That one, even if it goes in your direction.
It doesn't matter. Leave it. Exactly.
You know, I like telling the guys that I don't mind losing a trade that I prepared for than winning a trade that I did not prepare for.
Exactly. Because you don't know why you actually won.
I was about to say that. Because now the one that you win, you don't know, it might have been luck. It's fine. You know, luck can be exciting sometimes. You don't know effectively.
Made 10,000 on that specific trade. Like, oh yes.
Excitement. You know, blood is flowing, adrenaline. You now want to go to Diamond Walk. So check, you know, if you win the trade by luck, you must be worried.
Very.
But if you lose a trade that you planned for, you must be happy because now you can go back and see, all right, what happened here?
Got you.
Might have been a tight stop loss, which I can rectify.
Yeah.
But the one I don't know, dangerous.
You know, you actually reminding me now. Slooms, he had his tire obviously on the M, right?
Yeah.
And he said something very interesting to me. He said when he was speaking to the insurance, they said, no, they don't cover this thing and so forth. Oh. And he said to me, no. He says, no, I record every call.
Nice.
I record the call. They said, no, we're gonna have to hold on. They said we have to go and get the recording. He's like, no, there's no need.
You have it.
I already have the recording.
I'm sure they were shaking.
They were shaking. Oh. So I'm gonna send it to you now.
Yeah.
Then he went and he found the contract and he made sure the tires and rims and all of it was ticked. And he sent it to them and he said, guys, here's the recording. Here is the contract that says tires and rims are all. They had no choice. And he said,
I mean, there's nothing they can
there's
do.
nothing they can do. And it goes back to saying, listen, you've ticked the boxes.
Yeah.
This thing cannot move against you. All right. Yes, they can speak against you. They can say, yeah, but no, this, yes, but that. But at the end of the day, you have the proof. So if you've duplicated your setup 100 times, if you lose it once, it's okay. 99 times, this thing panned out because you monitored that specific performance, right? So hence me coming in this, saying to you, listen, T, you identify the problem with confidence. Confidence filters into, the lack of confidence filters into not being able to develop your own strategy because you don't have the confidence, the build to actually monitor how the market is actually setting up because you haven't trained your mind to do that because you in your feelings too much. I lost. Is this really for me? Why is he much better than me? Or why is this one making more money? All those are distractions from monitoring your setup or the setups and then developing your strategy around those setups.
Also the data behind it as well. You know, I always, your data is very important. So we can develop a strategy, but the confidence will come from understanding how it is it's been performing.
Yes.
Right.
Yes.
And then the challenge that one might get there is the patience that's required, the discipline is required. But yeah, I understand the point that you make in there.
Yeah.
Develop a strategy. Lack of confidence can stem from that.
Yeah.
And then now, before we go any further, that's already a problem. Already a problem.
It's already a problem.
That's going to be the difference between you making a profit or you losing your capital.
Yes.
All right. So that's a problem. So that's something that we need to really sit down, be patient, and work on.
Exactly.
Yeah.
So guys, maybe just to, I don't know, from my side, I think we've done some great work in terms of just this deliberating, distinguishing between the two.
Yeah.
Maybe just something from me with regards to what you mentioned. Guys, remember, setup is a collection It's an arrangement of tools, indicators, call them what you want, but they are tools that give you a high probable result that this setup with your strategy will move in your favor or not. I think from my side, I'd like to close with that. I don't know on your side.
I mean, you've just nailed it there. I mean, we've broken down the difference between a setup and a strategy.
Yeah.
Right. I think the points we made there are very precise and understanding. Right. Or understandable. So yeah. So I think that's essentially it. You know.
Yeah.
So let them just go think about it.
Yeah.
You know, try to look at the charts differently, but how you get the data is very key.
Yeah, how you get that. Remember, guys, the screenshots duplicating 50 times, 100 times. And he said something powerful. Put it on a PowerPoint.
Yeah.
Print it. Print it for yourself. Stick it on your wall.
Even better. The whole point is not only taking the screenshots and leave them there, but you need to go through them. Try and go through them each and every day.
Yeah.
Take 5 minutes and just go through. There's something that happens when you see same things
over and over. Yes.
Over and over. Something that happens with your mind because it adapts. It starts to identify these things. Try to go through them each and every day. Just take 5 minutes. Have them on your phone. Those pictures on your phone.
Yeah.
I tell you, 2 months from now.
It's and bro, it's what detectives do as well. Like they print out big photos of the crime scene because they're trying to see what did they not see before. So they'll watch it today. Tomorrow they'll go back to the same photo. Next week, they're going to go back to the same photo because they might be in a different state of mind then, and they might just pick up something they did not see.
There we go. You remind me of a movie called, one of my best movies, American Gangster.
Denzel. Hey, man. Come on. Hey, so he's an animal, that detective, eh?
Look, that he's Russell Crowe. His name is Russell Crowe. I forgot the character name.
Yeah.
So do you see how he took his time taking the screenshots? Wherever there's an event of these drug lords, he goes there, takes screenshots. Denzel Washington, Frank Lucas takes screenshots, and then he goes to them with his team. Exactly what you're just saying, to identify what he missed.
Did you see that part of the movie where he was looking at all of the families, all the mafias, and people were saying, oh, you know, they were saying this guy has done that, this is who, and then he sees the one picture of Frank looking back, and he's like, hold on. Why is he sitting in the front row?
There we go. It was in the boxing at the boxing match.
The boxing.
It was at the boxing.
It was at the boxing match,
sitting in front.
It's like, but hold on.
Yeah.
Only prominent people sit in front.
Who is this?
I've never seen this guy before, and he's speaking to you know all the families. They're sitting behind him. And that's where it click is like, I've seen something I should, and then he puts him on the wall. He's like,
that's where you got it.
That's where he actually got them. So,
but you know, that moment came from the
observation. Yes.
Consistent looking at those things, trying to figure out. But then he missed. Maybe it might have been that he saw him before. Right?
Exactly.
But then in that event there, he was sitting where, you know, it's just not just anyone who sits there.
Exactly. And he was wearing a chinchilla.
Yeah.
The coat,
The
coat. And Frank burnt it afterwards. Because for him, it was like, why do you know, he liked that his wife bought it for him, but it was too loud.
It was creating a lot of noise.
A lot of noise.
And you know, that's not what he was. Because now he was subtle with whatever he's doing.
But bro, you actually reminding me now. He thought that the detective saw the coat. And that's why he picked him up. So he burnt the coat. But what he didn't realize, that's not why the detective picked him up. He picked him up because he was sitting in the front row where not anyone sits.
That's what he missed.
That's what Frank Lucas missed. So he sat there in the hype of things and just being, oh man, we're sitting in front. We important. He missed that. That's how the detective picked him up. Not the coat.
Not the coat.
It wasn't the coat. To Frank, it was the coat.
Yeah.
And his wife obviously was crying because, I mean, she paid a good pennies. I mean, it's a gift from your wife, right?
Yeah. Looks expensive.
It looks extremely expensive, right? So Frank missed. It was the front seat, not the coat.
I think let's end it there.
Let's end it there. I think
guys never watched American Gangster.
Watch
it this weekend. Like Denzel Washington.
Exactly. It will be a nice case study as to picking up things, looking for those little, identifying those little areas that other people won't see.
100%. Yeah.
And then guys, also catch us in Cape Town. We will be there on the 8th of December, streaming live. NFP is the last one for the year.
Yeah.
So catch me and T there on the 8th of December. Yeah.
There we go. And I think that's it.
That's it. Guys, thanks once again. See you guys soon.
Ciao, ciao.